Did you know that 90% of traders overtrade? What do you mean? They sit in front of the charts for hours. They watch every move tick by tick. They take 50 trades, and in the end, they lose. And the remaining 10% of traders, they take 1 to 2 trades a day. The rest of the time, they sleep, travel, spend time with their family, and they are the ones who make the profit. I call them the lazy trader. Lazy doesn't mean lazy. Lazy means smart. Lazy means focusing on the necessary tasks and eliminating unnecessary tasks. I will tell you today 5 things that lazy traders do not do. 1. They do not sit in front of charts all day. 2. They do not chase the news. 3. They do not use 100 indicators. 4. They do not take trades on every small move. 5. They do not chase losses. 5 more things lazy traders do. 1. Watch the big time frames. 2. Wait for a specific setup. 3. Follow automated rules. 4. Keep a journal and review it once a week. 5. Most importantly, pay for your peace of mind. Today we will cover Part 1, Why Overtrading is Your Enemy. Part 2, 3 Golden Rules for Lazy Traders. Part 3, The Power of Large Time Frames. Part 4, Autopilot Mode, How to See More with Less. Part 5, Psychology of Lazy Trading, Don't Feel Guilt. Part 6, The 7-Day Lazy Trader Challenge. Overtrading doesn't just mean taking too many trades. Overtrading means creating mental fatigue. Your brain is like a muscle. Making trading decisions means using this muscle. If you make decisions 50 times in a row, the muscle gets tired. Then the probability of making a wrong decision increases by 70%. This is called decision fatigue. The lazy trader knows it is not possible to make more than 2 quality decisions a day. That's why he doesn't take more than 2 trades. 3 reasons for overtrading. Why do traders overtrade? Reason 1, boredom. Sitting in front of the chart gets boring. Wants to do something, then takes a trade on any signal. Reason 2, loss taking. 1 trade loses. With this mindset, I'll make it up, takes the next trade. That too loses, then takes a bigger trade out of revenge. Reason 3, FOMO, seeing someone else making a profit, thinks, why am I sitting here? Then enters even if there is no setup. I had a student. He would take 15 to 20 trades every day. He would sit in front of the chart for 8 hours. At the end of the month, you would see the amount of loss is big. I told him, take only 2 trades every day for a week, not more. Rahat agreed. The first 3 days were difficult. I thought, why not take a trade? Opportunities are coming. Still, he stopped. Results after 7 days, 10 profits out of 14 trades, 71% win rate. Earlier it was 30%. What changed? Nothing. Just took fewer trades, reduced mental stress, reduced wrong decisions. 3 techniques to stop overtrading. Technique 1. Trade counter. Write down in a notebook how many trades you will take today. Maximum 3. Tick if you take trades. Stop when 3 are complete. Technique 2. Time blocking. Set aside 2 specific hours of the day for trading. For example, 9 to 11 a.m. There are no trades outside during this time. Technique 3. Create distance. Stand back from the chart. Set an alert. When the signal comes, come and take the trade. Do other things the rest of the time. 3 golden rules of lazy traders. The biggest difference between professional traders and amateur traders is professional traders use fewer indicators. Have you ever seen someone fill a chart with 7 indicators? RSI, MACD, Bollinger Bands, stochastic, all together. The problem is, at some point, these indicators start to contradict each other. Then confusion arises. Lazy traders use only 2 indicators. 1. Moving averages, 50 and 200, 2. RSI to identify overbought/oversold. That's enough. That's high time frame, low stress. Let's face it, no one got rich trading on 1-minute or 5-minute charts. Scalpers have to trade on short time frames. That's their job. But they have mental stress, eye problems, high blood pressure. Lazy traders only take trades on these time frames. 4 hours, H4, daily, D1, weekly, W1. Why? Because signals come less in these time frames, but signals are actually stronger. You will only check the chart for 5 minutes a day. once in the morning, once in the afternoon. I give you a challenge. For the next 7 days, only look at the daily chart. Even if you take trades, take only the signals of the daily chart. See the results. Don't try to be perfect in trading. If you are 60% correct, you are a successful trader. The lazy trader knows that it is impossible to make a profit on every trade. That is why he considers losses to be normal. Create an iron rule. Risk 1% per trade. This means you will risk 1% of your account on each trade. A $10,000 account means risking $100 per trade. If you follow this rule, even if you lose 10 trades in a row, your account will only lose 10%. You will stay in the game. Follow these 3 rules. 1. Less is more. Fewer indicators. 2. High time frame, low stress, daily/4 hours. 3. Consistency. 1% risk. Aim for 60% win rate. These 3 rules are the lazy trader golden triangle. Small time frames, 1 minute, 5 minutes, 15 minutes. These are just noise. Institutional traders do not trade on these time frames. They watch daily, weekly. Here's an example. Suppose you saw on a 5-minute chart, Bitcoin is making a breakout. You took a trade. After 10 minutes, the price went in the opposite direction. Why? Because it was a fake breakout, just noise. If the same breakout happens on a daily chart, it is much more important. Then the price can go in that direction for weeks. Lazy traders know one signal on a daily chart equals more valuable than 105-minute signals. How to read daily charts. Reading daily charts is very easy. You don't have to do anything complicated. Just look at these 3 things. 1. Trend. Look at the 50 and 200 moving averages. If the MA50 is above the MA200, uptrend. If it is below, downtrend. 2. Support and resistance. Identify the high and low of the last 3 months. These levels are strong. 3. Candlestick patterns, pin bars, engulfing, hammers. Look at these. Take a good candlestick pattern plus trade in the direction of the trend. That's it. You can look at the RSI to identify overbought or oversold, but that's enough. Time management for lazy traders. What is a lazy trader's day like? 8 a.m. woke up, had tea. Then checked the trading platform, checked the daily chart for any signals. 5 minutes, 8:05 a.m., placed a limit order if you got a signal. Set a stop loss and target. If you get one, the order is active. If not, wait. 5 minutes, 4 p.m., checked if there are any active trades. Target hit, stop loss hit, updated the journal. 10 minutes, total time spent, only 20 minutes. The remaining 23 hours and 40 minutes are yours. Family, work, sleep, entertainment. This is called lazy trading. Remember, larger time frames mean fewer trades, but each trade has a higher probability. And fewer trades mean less stress. Less stress means better decisions. Better decisions mean profits. Most traders use market orders, meaning they look at the chart, think enter now, and enter. The problem is this now moment is often emotional. Then the chances of making the wrong decision are high. Lazy traders use limit orders. Limit orders mean writing in advance, if the price reaches this level, then only take the trade. Example, I saw that there is support at 50 MA on the daily chart, so I wrote down, if the price touches 50 MA, I will place a limit buy order there. Now it may take 2 days for the price to reach there, but I will wait. I am not tense, because I have planned it in advance, creating an alert system. You don't have to sit in front of the charts all day. Use tools, free tools. Set an alert in TradingView. Send me a notification on my mobile when the price hits 50 MA. You can also set an alarm in your broker's app. Paid tools, 3 commas, automated trading bot, TradingView Pro, more alerts. When you get an alert, check the chart. Don't forget to open the chart the rest of the time. Philosophy. The main mantra of the lazy trader, set and forget. If you have done your analysis, set your stop loss and target. Then there is no need to sit in front of the chart after taking a trade. The price will go. Sometimes it will hit the target, sometimes the stop loss. Even if you see it, nothing will change. Instead, if you sit and watch it, you will get emotional. Let's get out a little earlier or hold more. You will make this mistake. Make a rule. Do not look at the chart for 1 hour after taking a trade.